Welcome back to Investing Talk podcast. Today we're zeroing in on a company that's definitely been generating some buzz in the financial tech world, Pagaya Technologies. The big question, really, on everyone's mind is now a good time to buy this stock? We've gone through a stack of sources to pull out the most important insights for you, so hopefully you can walk away well-informed without feeling totally overloaded. Before we jump in, if you find value in these discussions, please consider subscribing, liking, and maybe leaving a comment. It really does help us out. And hey, if you want us to look into a specific company for a future discussion, just let us know in the comments below. You could also consider buying us a coffee if you appreciate the work we do. Okay, let's unpack this. Pagaya Technologies, they operate in that fast-paced financial technology sector. It's an area, ripe with innovation, but also some pretty fierce competition. What's the initial take on their fundamental health from our sources?
Well, what's kind of fascinating here is that Pagaya actually reported a GAAP profit earlier than expected. That was back in Q1 2025. They posted a net income of $8 million.
8 million. Okay.
Yeah, and for a fintech, hitting GAAP profit ahead of schedule, that suggests some strong positive momentum. It points to a pretty competitive position within its industry,
That does sound like a great sign, especially for a fintech company. But often the devil is in the details, right? Or maybe the lack of details. What do our sources say about other key financial health indicators? Things like revenue growth, debt levels, or cash flow. Is that $8 million the whole story?
That really raises an important question. While that profit is definitely notable, our sources don't actually provide a lot of detailed information on specific revenue growth figures or, comprehensive debt levels or the precise trends in their cash flow.
Ah, okay.
So, yes, we have that positive profitability point, which is great, but it's, let's say, a less clear picture on the broader financial structure from the material we analyzed.
Right, so a key positive, but some blanks still to fill in on the fundamentals.
Got it. Okay, so when we're considering an investment, valuation is always key. What do the analysts and the numbers tell us about how Pagaya Technologies is valued, or perhaps where the gaps are there too?
Well, similar to the fundamentals, the sources indicate that specific valuation metrics, the usual suspects like price to earnings, price to sales, or price to book ratios, they aren't provided for a direct comparison here.
That makes comparisons tricky.
It does. It forces you to rely more on other factors. However, what we do see is that analysts have a consensus rating of strong buy.
A strong buy consensus, okay,
Yeah.
despite the lack of those standard metrics.
Exactly. And if we try to connect this to the bigger picture, it's intriguing because even with that strong buy consensus, the individual price targets from different analysts vary pretty widely.
Widely, yeah. Which suggests there are, some mixed views on the precise perceived value of the company, even among the analysts who generally like it. They agree it's a buy, but not necessarily on how much it's worth.
Interesting. So a strong buy signal overall, but maybe some disagreement under the surface about the exact potential upside. Okay, beyond the financials and the analyst views, many listeners track the stock's actual price action. Technical analysis. What does that reveal about Pagaya Technologies' recent movement?
Right. Looking at the charts,
Yeah.
the recent price action shows a pretty significant increase, actually. The current price is hovering around $31.12. And if you look at the moving averages, the 50-day simple moving average is down at $18.
18.
And the 200-day simple moving average is even lower at $12.53.
Oh, okay.
So with the current price so far above both the 50-day and the 200-day, and the 50-day well above the 200-day, that clearly indicates a strong recent uptrend, significant positive momentum.
So yeah, that's a strong uptrend. Definitely good news for anyone holding the stock or for momentum traders. But is there any caution signal indicated in that technical data? Sometimes strong moves can get ahead of themselves.
Yes, there is actually a potential flag. The 14-day relative strength index, the RSI, currently stands at 65.42.
Okay, 65.42.
Now, that's not extremely overbought territory, yet typically people look at 70 or above for that. But 65.42 does suggest the stock is currently in a slightly overbought condition.
Right.
Which, can sometimes precede a short-term pullback or consolidation. So, something to watch.
Okay, good to keep in mind. Uptrend is strong, but maybe getting a little stretched in the very short term. What about the overall buzz then? The sentiment around Pagaya Technologies, and maybe what key events might influence its path in the near future?
Well, the most notable recent news, and we touched on this, is definitely those positive Q1 2025 results, specifically hitting that GAAP profit earlier than anyone really expected. That's certainly contributed to an overall bullish sentiment. It's a good story for the company.
Makes sense. Profits ahead of schedule usually get investors excited.
Absolutely. But what's fascinating here, and maybe a bit confusing, is a slight contradiction in the sentiment data we have.
Oh, how so?
While the sentiment directly around Pagaya seems bullish, um, the broader Fear and Greed Index, which measures overall market sentiment, is actually indicating fear.
Huh. So the market's nervous, but Pagaya is doing well.
Kind of. And adding to that puzzle, the stock itself has experienced 67% green days in the last 30 trading days, meaning it closed up on two-thirds of the recent trading days.
67%, that's strong performance.
Very strong. So this raises an interesting question about how the market is truly processing the news, right? There's broad fear, but this specific stock is seeing a lot of buying, maybe a flight to quality or perceived growth.
That is a fascinating divergence, something investors need to think about. So looking ahead then, what are the potential catalysts? What's next on the horizon?
Well, the next big clear catalyst is the Q2 2025 earnings report. The expectation, based on our sources, is that it should be strong. Continued positive earnings could definitely provide another short-term boost.
Okay, so earnings are key. Anything else? Product launches, M&A?
Our sources don't really highlight anything specific on that front, like major product launches or any merger and acquisition activities as, immediate upcoming catalysts. So the focus really seems to be on those earnings results for now.
Got it. All eyes on the next earnings report then. Now, every investment carries risk. It's unavoidable. What should potential investors be particularly aware of when considering Pagaya Technologies? What are the potential downsides or red flags?
Yeah, risks are definitely present. The sources highlight significant volatility. There's a 12.98% volatility measure mentioned.
12.98%. That's quite high.
It is. It means the price can swing pretty dramatically.
Yeah.
So not for the faint of heart, perhaps. And beyond that specific stock volatility, you have sector risks. The fintech space is, as we said, highly competitive. And it's also subject to regulatory changes, which can always impact business models.
True. Regulation is a big factor in finance.
Definitely. And then, of course, there are the broader macroeconomic risks, economic downturns, interest rate hikes. Those could impact all financial services companies, including Pagaya, maybe affecting loan demand or performance.
Okay, so volatility, competition, regulation, and the macro environment. Quite a few things to consider. Given all these factors then, the early profitability, the mixed analyst targets, the strong uptrend, but with that RSI caution, and these risks, who is Pagaya Technologies most suitable for, would you say?
If we connect all this stock probably appears more suitable for, say, long-term investors.
Long-term. Why specifically?
Well, because of its potential for growth in an innovative sector and that strong buy consensus from analysts, even with the target variations. The early profitability suggests a potentially solid foundation for future growth.
Okay. What about shorter-term folks?
Well, short-term traders might actually find opportunities too, precisely because of that volatility we mentioned and the upcoming catalysts, like the earnings report. Those create potential entry and exit points for traders.
Right, volatility can be a double-edged sword.
Exactly. It really depends on an investor's time frame and, importantly, their tolerance for risk.
Okay, that makes sense. Different strokes for different folks, potentially. So let's bring it all together. What does this mean for our original question? Is now a good time to buy Pagaya Technologies? What's the bottom line from this analysis?
Based on everything in the sources, our analysis gives Pagaya Technologies a rating of 7 out of 10.
7 out of 10. Okay, why that number?
The rationale is, well, it's shown those positive fundamental developments, specifically hitting profitability early. That's a big plus. However, the valuation metrics aren't all there, which creates some uncertainty. And we have that mix of analyst opinions on price targets, even with the overall strong buy. Plus, the technicals show that strong recent uptrend, which is good, but also those slightly overbought conditions with the RSI, warranting some caution right now.
So, solid progress, but not without its caveats and unanswered questions. A 7 feels like a fair reflection of that balance.
I think so. It acknowledges the strengths while flagging the areas needing more clarity or caution.
Okay, so based on that 7 out of 10 rating and our discussion, any practical takeaways? Maybe some speculative levels for people to think about? Recognizing, of course, this isn't investment advice.
Right. Absolutely not advice, but based purely on the analysis and the sources. For long-term investors, maybe a cautious entry point to consider could be somewhere around the $25 to $28 range.
$25 to $28.
Yeah, that might offer a slightly better entry if there's a pullback from the current levels, especially considering market conditions. For traders looking at shorter time frames, the report suggests maybe considering a stop loss below $20 to manage risk, and perhaps a take-profit target somewhere near $35, trying to ride that recent momentum.
Okay, sub 20 stop, 35 take profit.
But, and this is crucial, everyone needs to remember these levels are purely speculative based on this analysis. They should absolutely be adjusted based on individual strategies, risk tolerance, and how the market actually develops. Always do your own homework.
Absolutely critical point. Always do your own due diligence. Well, this has been an incredibly insightful look into Pagaya Technologies. It really presents a nuanced picture, doesn't it? Clear strengths, but definite risks and uncertainties too. What stands out to you as maybe the most important takeaway or question from our discussion today?
That's a good question. I think this raises a really interesting point for investors right now. How much weight do you actually put on a single company's strong performance, like Pagaya hitting profitability early, when the broader market sentiment, according to indices like fear and greed, is still indicating fear? You see this stock with tons of green days, a clear uptrend, good news. Yet the background noise is cautious. It really challenges us to think critically, doesn't it? To look beyond just the headlines or the overall market mood and understand what's truly driving individual stock movements.
That's a great point. Dissecting the signal from the noise. Absolutely. Well, thank you for joining us for this investing discussion. We really hope this look at Pagaya Technologies has given you a clearer, more nuanced picture and helps you make informed decisions that are right for you. We'll be back soon with another detailed look at a company you might be curious about. Until then, happy investing.